Hello everyone. This is the pre-market report video for 1st February 2023 in terms of Nifty and Bank Nifty. Finally, the budget day has come today. Today, if there is any change in capital tax, for that matter, any non-favorable tax change can accelerate the stock selling. Particularly, it will make the FII to sell more aggressively and extend their selling spree till the end of March. So, it's better be and hoping there is no tax related change. Anyway, first let's look at what happened yesterday in the Indian market. Nifty opened a gap up of 80 points at over 17,700, but within 45 minutes it dropped over 170 points and reached the day's low of around 17,530. Then from there, throughout it tries to capture its lost ground and in the end it closed marginally positive. And regarding Adani FPO, I guess most of you might know already, it's fully subscribed. Actually, it oversubscribed for 10% than that of the requirement. To be honest, which I didn't expect at all. Sector-wise, except IT, pharma, oil and gas and all other sectors closed positive. Again, yesterday too, FII net sold shares worth approximately 5,450 crore rupees, which means in the last 3 trading sessions, FII net sold shares worth over 16,000 crore rupees. Anyway, again DII net bought shares worth approximately 4,500 crore rupees. Then after our market hours, all 3 US major index opened flat and throughout the day it increased and closed really positive in the end. Why? There might be 3 possible reasons. First one, strong earnings. 2 US historically industrial major company, one Exxon oil producer released their earnings. Their profit comes as all-time high of over 56 billion US dollars, which in Indian money, their profit alone, please note here it's profit not revenue, it comes as over 4.25 lakh crore rupees. Then the another one was General Motors. Their management released the strong earning guidance because of their increased EV output. So that's the first reason, strong earnings results and guidance from the 2 major companies. Then the second reason was this consumer confidence index which was released by the conference board. Basically, it's an indicator that predicts the future consumer spending. The data comes as 107.1 against expectation of 109. This increased the positivity in the market as it shows the sign of slowing inflation. Then the third one was US employment cost index. In simple terms, US Bureau of Labor Statistics released their labor cost data. It means amount of labor cost increased in comparison to the previous quarter. Again, that too comes as 1% against expectation of 1.2%. So now lower salary increase, which means lower inflation worries. If we see, now more number of macros are showing the sign of reduction of inflation. This all made the US market really positive and closed positive. In the end, Dow Jones increased by 1.09%, S&P 500 up by 1.46% and Nasdaq rallied over 1.67%. US VIX crashed over 2.5% to 19.4. Dollar index and 10-year treasury bond yield were same as day before yesterday. However, oil was increased over 1% on the expectation of production cut in OPEC meeting, which is also due later today. At the time of this video, WTI crude oil is trading near 79 US dollars per barrel and Brent crude oil is trading at 85.5 US dollars per barrel. Then in case of Indian ADR, despite being IT negative in Indian market, in US ADR, Infosys closed near 0.6% positive. However, Wipro still closed negative, whereas banks were really positive of over 2%. Regarding SGX Nifty, at 3 am Indian Standard Time, it closed at 17,882, which means it's kind of indicating over 100 points gap up opening. So that's what happened in the global market. Now let's move on to the Indian market related info. Yesterday, India's Chief Economic Advisor submitted the 2022 and 2023 economic survey to the Finance Minister and Finance Minister submitted that to the Parliament. So here, I like to discuss some of the highlights. First, they confirmed that India will have GDP growth rate of 7% in FY 2023. However, in FY 2024, they gave the baseline and expects the GDP growth rate to fall to 6.5%. On the range, based on global economic condition, it varies between 6 to 6.8%. Then, regarding the tax collection in the last April to December period, gross tax collection increased over 15.5%. In case of GST collection, it increased by near 25%. They also highlighted that now India enters the top 10 service exporting countries in the world with the export share of 4%. And India is the second largest mobile manufacturing country by manufacturing over 29 crores handset. So these are some of the highlights. Then also government released the India's industrial growth rate. The data comes as this 8 core sectors combined grown at 7.4% in December. In sector-wise, coal, steel, cement, fertilizer and electricity all increased around 8 to 10%. Then the remaining three, natural gas and refinery products, increased only by sub 4%, whereas oil sector declined over 1%. Usually, whenever this data is released, this will have some impact on those respective sectors. But today, I doubt it because I expect the whole focus will be on the budget. Coming to earnings, yesterday there were three major companies released their earnings: Power Grid, Indian Oil Corporation and Coal India. Here, only Coal India delivered the better results. Their profit increased by over 69%, approximately to 7,700 crore rupees, and their revenue too increased by over 24%. In case of Power Grid, it's kind of mixed. Their profit increased just around 11%, whereas despite high GRM, Indian Oil Corporation's profit decreased by over 87%. As a summary, US market closed super positive. Even SX Nifty is indicating gap up opening of over 100 points. In case of ADR, finally banks looks really positive. However, there are some weakness in pharma sectors since most of the pharma companies got the huge short build-up yesterday. So maybe there might be some budget related impact on pharma, which at present we retailers didn't know about that. Regarding delivery percentage, not HDFC Bank, but HDFC, Kotak Bank and Airtel all got delivery percentage of over 73%. Then regarding the things to look out for today, obviously the first and most important one will be the budget, which the finance minister will start to present it in the parliament at 11 am. Then about the other items, various manufacturing PMI data for various countries including India, Europe and US are scheduled to release. Then in the night, all important US Fed interest rate decision and the number of present available job openings data in US will be due today as well. In case of earnings, Britannia, Ashok Leyland and Reddington are scheduled to release. Now coming to technical, Nifty forms a bearish hanging man candle and Bank Nifty forms a bullish hanging candle. Here generally both these candles will be the representation of respective reversal indication. However, this lower long shadow in both Nifty and Bank Nifty is the indication of support based buying, which is kind of positive. Anyway, as I said yesterday, we can be bullish only if Nifty crosses 17,800 decisively. In case of Bank Nifty, it has to hold 40,500 today and tomorrow. If it is, then in the short term, we can expect more upside in the range of above 41,000. Then coming to moving average and technical indicator summary, in daily chart for both Nifty and Bank Nifty, it's all same as last 2 days, which is strong sell indication. However, I just want to highlight this one thing. If we see the daily moving averages, at present Nifty is trading only above the 200-day moving averages. So those two 200-day moving averages, I mean both simple and exponential moving average, will act as the significant support. Coming to open interest analysis, based on change in open interest for Nifty, weirdly there was a significant number of call option unwinding took place at 17,500 and 17,800 and maximum new put options were added at 17,600. Thus, 17,600 will act as the immediate support. Then based on overall open interest, 17,300 got significant put options without any call options. So 17,300 will act as the strong support. In case of higher side, 17,900 is the immediate strong resistance to break. Regarding Bank Nifty, based on change in open interest, significant call options unwound between 39,500 to 40,500 and huge new put options were added at 40,000. So both, based on change in open interest and psychologically, 40,000 is the support to look out for. Then based on overall open interest, 41,000 is the immediate resistance. Then the next one to break is at 41,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers educational purpose only. Thanks for watching.